Good evening, TradeFlare family. Welcome to the nightly breakdown, where we break down what happened today in the stock market, as well as give you an idea of what we're looking at into tomorrow. So let's look at some key points before we head over to the charts to conduct a technical analysis of the SPY and 5 stocks that we're looking at into tomorrow. The first key point I want to start with is the FOMC meeting that we saw today. Just like we had predicted in the nightly breakdown last night, everything had remained unchanged as far as rates. The Fed is still looking at the metrics of 2% average inflation and using a qualitative approach to determine maximum employment. Now, while we still haven't seen average inflation above 2%, we still aren't at a qualitative max employment. And during the press conference today, Powell reiterated that they use a broad range of indicators to determine max employment and that they are being careful about assessing where it's at. He said some of the two main factors are going to be participation and wages, and he said he does expect job growth this summer. On the reverse repo topic, he said that there was no problem and that they were doing their job by providing a floor under money market rates. As far as taper talks, he said the discussion about the discussion is had, and there will be more discussions about the future of asset purchases from the Fed. Now, the biggest thing that really stood out to most people today was the hike in the IOER, and this is the interest rate that the Fed will pay banks for their excess reserves. Now, the reason we saw an increase in the IOER, the reason they do this is to prevent the federal funds rate from going too low. Now, so the reason I like this is because it's going to relieve some of the strain that we just saw on the front end of the curve. And the banks have too much cash and money market funds. It's tough to make anything right now on money market funds. I think it's good, it's positive for the banks that they can make money on their excess reserve. I think this helps the banks position for a potential hike in rates. Now, going forward, the Fed is definitely leaning more hawkish. They're projecting a lot of momentum into the next few years. They're projecting a 3.5% growth in GDP next year. They still have those guidelines in mind, the 2% average inflation and maximum employment. At this point, it seems that nothing is going to stunt Mr. Powell, and we'll definitely see some market digestion into the rest of the week. Headed over to our next key point, I want to talk about Biden and Russia. And this has been in the news a lot because they met today in person, and this was to discuss with Putin about a few things that have been going on that have led to a horrible relationship with Russia. The two main things they were talking about were human rights and containing dangerous weapons, and they discussed the details of what types of dangerous weapons they were talking about. I think cyber attacks were included, and I want to bring this up and I want to keep this idea in the back of my mind, especially as we go into our watch list today. There's definitely more hype surrounding the cybersecurity area right now. I really want to see how this plays out, so I'll be watching for news on this in the future. Now, to our last key point, as always, will be our sectors. Now, looking at the sectors, we only had consumer discretionary close positive, with banks and healthcare right behind. On the other hand, on the downside, we had utilities, consumer staples, building materials, and industrials leading there. In the middle of it all, we had tech and energy. And out of the three indices, the NASDAQ did close the strongest. Now, keep in mind, consumer discretionary, financials, and healthcare were all leaders after the FOMC meeting and the press conference. So I'm going to be watching these sectors closely into tomorrow. On the other hand, I want to watch these inflation plays while they're down. The inflation is not gone, so watching building materials, oil, and consumer staples there. Dive into the charts, starting off with an analysis of the SPY ETF, which tracks the S&P 500 index. So looking at the daily and looking at candle structure here, we have a long body with a long wick on the bottom. If you treat this like a bearish move, we saw a 38% retracement if you draw your Fibonacci's from all-time highs, and that's where we closed. Overall, we did see some price acceptance above the 420 level, and as far as how the market internals were today, it shows me that the short-term sellers were definitely in control. As far as volume goes, to the sell side, it was weak. So as far as this move goes, I'm not sold on it, and I think that the guys who shorted the lows today are really hurting. And I think if we open up above that 23 level, I think we can squeeze some of those shorts. But if we open lower and we open in the bottom of today's range, we could look to break that 20-day SMA on the daily and go all the way down to the 50. Confluence between the 50-day moving average and the 416.50 support is gonna act as a super support. We sort of saw that today with the 20-day SMA. If long-term sellers were really convicted and in control today, I think we would have definitely broken through that 20-day SMA. This move is really weak, and I think it's just juicing up the buyers. So tomorrow, I'm definitely sideways to bullish on SPY. So now that we have an idea of where our broader market sits, let's dive into the watch list. And leading off tonight's watch list, I've got CrowdStrike Holdings, ticker symbol CRWD, and I'm looking at this thing on the daily, and I noticed this bull flag, this daily bull flag. There's also a lot of volume on this candle today, and this is showing us buyers are in control. Another reason I like this is because the Biden-Russian deal is in the news, its main headline, and people are talking about cybersecurity, and CrowdStrike is the leader. I'll also be watching Datadog, Zscaler, and Palantir. We saw a lot of volume flow into those three today, so watch these. Next up on the watch list is Sunrun, ticker symbol RUN. And looking at the daily, there's a few things I want to point out, and the first thing is the fact that we have broken and retested all of our resistance trend line. This tells me that we are out of a downtrend, and especially with this volume and this candle closing above the 50-day SMA, and you see the 20-day curling up for a golden cross. Now this thing looks really nice for the break of a $50 price level. If we break that, I think we'll see our first resistance at the top of this gap here around 54.68. Then the next level after that is going to be 57.62. Definitely bullish on Sunrun and this industry at the moment. I also have my eye on Enphase Energy, ticker symbol ENPH. Now for our third stock on our watch list, we have ChargePoint. This thing wants to run with the rest of the clean energies. We had really nice volume today. It looks like we're in a great position to break this horizontal resistance around 32.50. If we do get that break, my first target's the top of that gap at $36. One thing to take notice is all three of the companies that we've mentioned on the watch list tonight all have a lot of volatility stacked into their option chain, so be careful with that. Make sure you know what your option is pricing in and what your plan to do with it is. Next, let's head over to the member suggestions, and batting cleanup is Clover Health Investments. This is a growth stock that recently ran with all the memes. As far as this one looks, it doesn't look like it's telling us much or anything about where it's gonna go. This is a speculative growth company and a short squeeze company, but as far as it looks here on the graph, it looks like we still have a gap to fill all the way down to $12. As far as this past week went, this is all just emotional buying, short squeezing, all of that hype built up into something that looks exactly like this chart. A lot of these meme stocks have a very similar chart, and this is one of them. And I prefer to stay away from stocks like these, or if I do want to play them, I'm just going to throw $100 and let it ride. And lastly, we're watching Apple, ticker symbol AAPL. Now looking at the daily, looking at candle structure, this is a hammer candle with a long bottom wick, and it punctured through that 50-day SMA, but it did not hold. It closed in the upper third, but if we do not hold that upper third, say we close tomorrow in the lower third, I would look to go lower. But if we do open up in this upper third of the range, I think we could start to break out and test $132. But as far as Apple and the rest of the tech sector lies, there's not much conviction in either direction. There's a lot of emotional selling and emotional buying today, but we want to see tomorrow how we open up and how the market digests what we heard today. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, or if you learned something, make sure you hit that like button and don't forget to subscribe so you can get notified when we post any live or educational content. If you're looking to join our team and be surrounded and motivated by our online community of traders and investors, as well as gain access to our trade signals that let you know whenever we make a trade, check out the link in the description below to join our Discord. And to gain full access, upgrade to TradeFlare Pro for $24.99 a month and get half off your first month using the discount code TFPRO2021. And do not be mistaken, we are not financial advisors and none of this is a recommendation. The stock market is risky and you could lose money, so use the information in these videos at your sole discretion. And as always, you cannot forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.